people are always shocked on how expensive it is to close real estate around here.
We're going to open with the closing cost problem. Aren't we number 2 in the nation, only to D.C.?
That is correct.
Washington, D.C. is the most, but Delaware is at 5.4%, leading the average closing cost to be about $18,000.
These 5 places have the largest shares of middle-class residents in the U.S., and Dover, Delaware is number 1.
If you make $54,000 by yourself, you cannot buy a house. You would have to have 2 people making $54,000 to get close to buying a house. So you're from Delaware. You've been writing mortgages now how many years?
Since 2007.
I didn't say that. I said how many years?
So that's
Do you know
17 years.
You're old.
Yeah,
Holy
I'm
cow.
old.
So 17 years of writing mortgages. What is, I don't want you to give me the 17 things you've learned, but what's the one thing you've learned specifically for Delaware in 17 years of writing mortgages for Delawareans?
So Delaware, you and I have been talking about this a little bit, is people are always shocked on how expensive it is to close real estate around here.
We're going to open with the closing cost problem.
Yeah.
Because aren't we number 2 in the nation, only to D.C.?
That is correct.
Wow.
So when...
Off percentage.
Percentage. Correct. So $300,000 home,
Yes.
rule of thumb, it's about 5%.
Because in D.C., that $300,000 home is going to
Exactly.
be $1.2 million. So to be very clear,
exactly.
Closing cost by percentage, we are second to D.C.
It's nuts. And that's like even I get shocked by it when I pull, write up a closing sheet. I'm like, is this right? And then I add it up, I look at it. I'm like, yeah, it's expensive.
Is that a form that can be found online, that report, you think?
The 5%, the one I was just talking about?
The one that we're second to D.C.?
Yes. If Sean looks up,
I just realized Sean can still look up things, even though we have this weird. We have a new PC, so forgive this weird wallpaper.
Can you put it on there?
I think so. Yeah, I think we're still good.
I just Googled highest closing cost per state.
Closing cost per state.
And I think it was just from April. I think it's Bankrate.
Oh, that's a good one.
Put it out.
Because I remember reading the article. I just don't remember where it's at. When I would type in to find it. But breaking that down though. Closing costs, that's title, that's attorney, that's what's paying you, that's what's paying the title people that are actually doing the work. It's paying for the survey.
Correct.
It's paying for the inspections, the transfer tax. All of that's involved in everything we're calling closing costs.
Correct.
Is there any one thing or 2 things that, again, over the last 17 years has gone up the most?
Title insurance has gone up.
Okay. And can you explain what title insurance is real fast?
So title insurance just protects basically the title that
But what's the title?
The title is just the ownership of the property itself.
What's the difference between a deed and a title, though?
The title and the deed, I think you get the deed once the title, or you get the deed once the home is paid off.
The title's retired, so the bank's
Correct.
keeping the title
Correct.
while you remain with the deed.
Correct.
Once you pay off the mortgage, the title gets given to you.
Correct.
Understood. So title insurance, that is the attorney, of course, going through and making sure there's nothing about this home or land you don't know about, or any liens attached to it.
I think if you scroll down a little bit.
Washington, D.C. was the highest. In general, that's a good one. Can we go back up to that? In general, closing costs for a home purchase cover expenses and fees, including a couple more we didn't mention. The credit check.
Credit checks have gone up.
Don't you cover that, though?
So we cover it, and it gets reimbursed to us if the loan closes.
They close. Got it. So Whitecap Delmarva, free credit checks and free credit repair. Just want to let everyone know. Title search and insurance. I do have teeth now. Appraisal, attorney fees, which for Delaware, we are an attorney state.
Correct.
So you do have title and attorney. What's an origination fee?
So origination charge, you can actually maybe lump the next 3 in the same...
Your origination fee, your application fee, and your underwriting fee.
Correct.
All in the same boat.
That's really...
Is that all mortgage processing fees?
Correct.
Okay, so
same thing.
Everything's getting checked. Everything's getting verified. You work for who you work for.
Correct.
Got it. Okay.
Sometimes it's itemized, but normally it's a lump sum. Like they'll call it an origination charge, an underwriting fee, a processing fee.
And then we arrive on transfer taxes. That's the last one.
Yeah.
Delaware ranks in the country for that one too. I want us to confirm, find a trusted real estate advertisement. Shooey.
Put your name up.
Put our name.
So
let's apply to sell our home now and see who calls us.
Right. We should.
See how long it would take a realtor to call us.
So this is what.
Okay. So depending on what state you're in, Closing Corp's data shows it wasn't Bankrate. This is a Bankrate.com article, Closing Corp's data.
Correct. Sorry.
Got it.
Yeah.
No. That was me being a dick. You don't have to apologize. that these fees can amount in anywhere from less than 1% to the home sales price. So again, going back to the percentage, to more than 5% at the highest end of the range. And we are in that high end of the range.
It's the highest. Keep scrolling.
Yeah.
You won't.
No one else is in 5?
No, I mean,
so just for anyone
close.
who can't read that, Washington D.C. is the most with 3.9%, and including their taxes, of course. Their taxes are crazy. Alexandria, Virginia, of course, that's Northern
Anywhere
Virginia.
outside of D.C., really.
It's the Richmond, outside of Richmond, as they call them. But Delaware is at 5.4%, leading the average closing cost to be about $18,000. Yeah. I do remember a time where there were $12,000 to $15,000. So that definitely has gone up. The percentage, can we scroll down? Is there ever a higher than 5?
The next is PA, which is like 4. I think it was 4.5
and
or something.
It looked like that was the only one that was in the 4s.
Yeah.
Whoa. Okay.
So
why?
So when you get
why I feel so, by the way, I feel really vulnerable right now.
Feel violated, don't you?
Okay.
I do.
No, I don't feel maybe I feel vulnerable, not violated, because I didn't know about this.
Yeah,
I should know that. Wow, I did not know Delaware was the only one.
And I'll tell you what, throw first-time home buyers to the side for a second. Let's talk about people moving out of state. You know, you get someone from, like, let's say Connecticut, 2.1% there. They see Delaware's and they're expecting, why are closing costs so high?
Already bought a home.
That's the cost of our transfer tax. What they're paying total.
I get what you're saying. So someone's already bought a home in one of these states.
Correct.
They walk in expecting something.
Correct.
And if you've never heard of, which I know you have, price anchoring.
Yep.
You expect one thing, get another.
Correct.
I hate $4 gas until it's $3.80, and then then $3.60. But then when it's back up to $3.80, it's like, at least it's not $4.
Exactly.
I explained that poorly, but
I know what you mean, though.
This is what you're saying. The price anchoring. If I bought a home in Montana, and then I move over to Delaware, where Montana's 0.8% to close. That's only $3,500.
So it's
what's the big difference, though? So obviously Delaware is known for being a very favorable tax state. So when you actually physically own the property, the month-to-month yearly expenses are low. We also know that if you own a business, the LLC taxes in Delaware, one of the most favorable, if not in Nevada, in the entire country. And then the third element would be our sales tax.
Yeah.
You day to day at the pump, at the gas station, whether you're at the store, whether you're even shopping online, like ordering something on Amazon, everything is tax free.
That price that you see,
the price you see on the tag is the price you pay.
Yep.
So all the tax favorings on the long-term end, is this Delaware's way of getting their money on the front end? Is also going to, how is this money getting distributed, and why is it so much more expensive?
Yeah, I mean, look, the transfer tax alone,
2%.
It's 4% split between buyer and seller.
4% total.
So this isn't even getting into the seller side. This is just the buyer. So,
is this? Does this factor in the fact that they're only splitting the transfer tax?
Yes.
Okay.
This is for the buyer. So right off the jump, that 5.4. 2% of that.
I'd love that broken down.
2% is the.
I'd love that broken down.
Is the transfer tax.
You know what we could do, Sean? Can you see this? Can you see this document on the camera? Like, can you see stuff? I'm about to put something under the table. I have an Alta sheet.
There you go.
I have an Alta sheet. We can read closing. I'm going to fold this up so I can't see names. But I just want to confirm we can't see that. I folded up all private information.
Yeah, and when
I forgot you couldn't see it on the actual. I'm sorry.
Sorry, dude. My bad. When people are looking at this, it's all relative to price.
Okay, that's fine.
I always say, Delaware's a cheap state to live in overall, but when you buy a home, property taxes are relatively cheap compared to other areas, but they slap the shit out of you up front. That's how I describe it. And that generally sinks in, because a lot of times you're like, whatever, Mark, they're higher than other lenders or whatever. Then they go and look, they're like, damn, Mark, you were right. Or they look it up online.
Yeah.
They're like, because it's a reality check that adding an extra 5% on, it's a slap in the freaking face.
Well, but honestly, though, that's why I trust talking to you and having my clients talk to you, and have been for so long, because you're going to tell them
how it is.
And to be honest, what has sent some clients to decide not to buy a home in Delaware, which is going to be what it is, because ultimately that person wouldn't have wanted to at the end of the day, or would have resented you or I,
Exactly.
or would have made it to the closing table like, yo, I can't afford this, and then everything blows up. So I appreciate that, and I think there needs to be more of that in this business, because I think I speak for most that are listening to this that feel like there's so much information everywhere that you don't know who to listen to, who to trust, and ultimately everyone's trying to like how to open your wallet. Everyone wants you to open their wallet for them. And so when you, exactly, you're sitting there like this. So when you sit here and you take that same hand and you go, and give them a reality check, it hurts. It stinks. They're like, 18 grand? Whew. Well, at least we know, this is where we want to go, but now we can prep for it, you know?
And prepping, exactly. Like, what's the number one thing I would say? Credit and all that's an easy fix. I can't save money for you. Save money just in case.
That's everybody. Yeah.
You might not
first-time home buyer, boomer, everyone on the board. Yeah.
You might not be able to get seller's assistance, and you might be in a situation where you need the cash. So save money's definitely number one. There are ways around it. Don't get me wrong, but you have to prepare for the worst.
Could we talk about some of the ways around it? How can you close without money? Do you have a lot of income, really good credit score? Like, are there any little loopholes people should be listening for?
No, not other than look. There's three things: down payment, closing costs, prepaids.
What's prepaids?
Upfront taxes and homeowners insurance.
Closing costs.
Correct.
Don't change the lingo.
Down payment. There's not a lot of options besides VA and USDA that don't require a down payment.
Don't require the money back.
So even on VA and USDA, you still got to figure out closing costs.
And USDA, you're going to have a slightly higher mortgage payment.
USDA, you're going to have
And the income limits are very tough now.
Income limits are tough, and that's the other thing.
Have they adjusted those yet? Are they planning to?
USDA's gone up a little bit.
But not, I mean an inflationary update.
No.
We need an inflationary, not this 3 to 4%.
Yeah.
We need to move with how home prices move.
They say they are, but when you look at what affordability is,
I'd like to know the percentage they've gone up since 2020.
You can't. Like, I send you that screenshot of Dover as the highest of middle class.
Can we talk about that?
And they showed the income.
Can we
and
talk?
we laughed.
Was that a CNBC article?
That was on CNBC.
Do you mind trying to see? Are you good to try and see if that article? Yeah.
We laughed. We were like, even if you had zero debt, that income, unfortunately, it's not like it's hard to still get a home.
And that is the first updated household income I've seen, and Delaware being at $63,000.
I think it was lower than that. I think it was 54.
Was it 54?
Mm-hmm.
What is it exactly?
Look up CNNBC.
Here, let me pull up.
Middle class home ownership, or middle class population by town.
I'm just pulling up the text I sent you.
Yeah, it'll probably have the article name on it. Because basically what this is saying is Dover, Delaware is number one in the entire country for middle class percentage ownership of the city.
Largest shares of middle class residents in the U.S.
So that's what the article says? Okay, so say that again.
These 5 places have the largest shares of middle class residents in the U.S. and Dover, Delaware is number 1.
Got it. So we'll pull that up real quick to look at the other ones. But so basically what that means is if things are expensive now, right, for everybody, it means people in Dover are probably going to feel it harder than anyone else, because Dover as a city hosts most of its population within its middle class, and our middle class is classified as, I want to get this amount. I said 63,000. We can keep going down depending on where you live. Oh, that's Delaware. Dover, Delaware's on CNBC. Oh no. Depending on where you live, still over half of U.S. adults self-identify as middle class. Okay, so we're going to go through this article. Middle class in Dover, Delaware. Over half of U.S. adults self-identify as middle class or upper middle class, according to this 2024 Gallup poll. The numbers remained around 50% or higher for at least the last 2 decades. The numbers tell a similar story. Just over half of Americans, 51%, were considered middle class in 2023. I guess there's still some defining of what that is. And it says right there, for context, the U.S. median household income is $74,580. Can't buy a house with that, most likely. That means the middle class households earn between $49,720 and $149,160.
Yep.
Here are the top 10 metropolitan areas. We're not metropolitan. With the largest shares of middle class residents. Dover, Delaware, 65% share of middle class residents. So to be clear, going through this list, I don't think there was a single one that came close to our median household income. Dover, Delaware's median income is $54,438. Can we scroll through these? Olympia's 88, New York 69, Bismarck 77, Ogden 92, Lancaster, Pennsylvania, neighbor 82, 95, 67, 69. So nowhere close. No one's even in the 50s, never less 54,000. We can go back up. So this means that Dover. Oh, actually, that mentioned Dover in the last little closing article.
There's a Dover right there.
Well, go to. I already read that one. Just go down real quick. I think the last article actually mentioned it. So 65%. There we go. The Midwest is best representing U.S. region.
Dover's right
that way.
it.
That may contribute to why Dover, the capital of Delaware, has such a high volume of middle class residents. Wait, why is it?
Public admin jobs.
Oh. Public administration jobs. Interesting. Okay. So it thinks that's the reason why. But breaking this all down for the reason this article means anything to anybody is $63,000. I'm sorry, I keep saying $63,000. What was the amount? $54,000. If you make $54,000 by yourself, you cannot buy a house. You would have to have two people making $54,000 to get close to buying a house. So that's where...
You could with no debt, but that's very rare that we see.
But we're talking about household debt.
Yeah.
54,000. We've talked about it before, the unfortunate need or expectation around you have to buy a home with somebody. What do we got here? A median income map. Look at that. So this is median annual income. So we have 49,280 right there. So I guess that means that most likely this has gone up slightly, but still not much. 49 to 54, while the cost of everything is skyrocketing.
Well, I think that was the whole state. I think the 54 was just Dover.
True.
Yeah.
True.
So.
Thank you for catching me on that. So I want to wrap this podcast up. We're talking mortgage, we're talking interest, we're talking closing costs, we're talking everything's expensive, right? But can we not glaze over what we just went over?
Yeah.
The fact that we're living in a metropolitan hub that basically saying it can't sustain the increase in price points?
Yeah.
Because 54,000 is not getting it done. We're talking. Get off the home ownership. 54,000 is not getting it done lifestyle-wise for most adults with kids.
And honestly, the only thing I can think of, and just my opinion is, a lot of people, Dover's not exactly booming maybe per se with new construction. So I'm kind of thinking that a lot of the people that are here that are middle class their rates are in the 2s and 3s.
They're just sitting on their $1,000 mortgage payment.
You know, and I just think of people like my parents and some of my friends' parents.
What does that mean for the long term of Delaware? If the long term of Delaware, and hear me out, Delawareans listening, they're about to get mad. But if Delawareans' route is improvement, Delaware's path is growth.
Yeah.
We're getting people moving in that have money, right? We have people moving in from New York, Vermont, Connecticut, New Hampshire, Jersey, all over. And I'm going to say this again, lightly as I can, with 5 times the amount of money in their savings account than the median person is making per year in Dover.
Yeah.
The path to me sounds like then in Delaware that we're going to grow, but it seems like we're going to outgrow a certain type of people that are going to financially not be able to afford staying here.
Yeah. A lot of retirees, moving to retire because, cost of living obviously in Jersey or New York or anywhere in Northeast.
Because we're still a discount state.
Still a discount
for all of the other states of the because if you're Delawarean, you're like, oh, we are not a discount state. We've never been a discount state, and we sure as hell don't feel like one now.
Yeah.
New York feels it harder. New Jersey feels it harder. All the way up to New Hampshire, Maine, they feel it harder. The financial strain is hurting them deeper at a higher level.
Yeah.
And the relief that would come from selling their $600,000 normal home in Cape Cod and moving it down here, all that equity, it makes all the sense in the world.
$12,000 in property taxes or $1,200 in property taxes.
And that's where it goes down to the long term. Yeah. It's so much cheaper to live in Delaware. Yeah. But what happens when the upfront cost of getting the home in Delaware gatekeeps it from Delawareans?
Yeah.
That's our podcast, everybody. Incentives. But seriously, this is Mark, Whitecap Delmarva. Where can I contact you, dude, if someone wanted to hit you up and ask mortgage questions?
What, my email address?
No, dude. Please give your social media handle. Do you know it?
At MortgageMark302.
At MortgageMark302. You're just about to give your email address live on a pod. Do
you want my fax number?
Yes, we'll get the fax scan. We'll get it all taken care of. About to spout out his email.